Hello, everyone, and welcome to GHG Accounting and Reporting One-on-One, a crucial green skill for all professionals. While we are waiting for everyone to join, please introduce yourself in the chat, name, pronouns, where you're dialing from, maybe your LinkedIn. Go ahead, make the chat bot active. And we'll start in a few minutes. We have quite a lot of people joining today, so yeah, please introduce yourself in the chat and we'll start in 1 minute. Let's get started. Again, welcome to GHG Accounting and Reporting 101, a crucial skill for all professionals. Session sponsored by Work on Climate with the support of OnePointFive. My name is Victoria and I'm a volunteer on the sub-communities team at Work on Climate. I'm also joined by fellow volunteers at Work on Climate, Chris and Douglas, and Denise and Laura from OnePointFive team, who are helping monitor the chat and support the tech side. So if you have any questions, drop them a note. We all have names and Work on Climate or OnePointFive team in our names. Our presenter today is Yeoh, founder and CEO of OnePointFive, a climate advisory and academy. For our format today, we will begin with a 1-hour presentation led by Neil, but please feel free to ask your question throughout the session in the chat, and Neil will answer relevant ones as they come. And we should also have some time to answer a question at the end of the session. Please note that this session is being recorded and we will be posting it later on our Slack channel as well as our YouTube for those who couldn't attend in person. But before the session starts, I'd like you to quickly tell you a bit about Work on Climate. With over 30,000 members and growing, Work on Climate, a nonprofit organization, is the world's largest and active community dedicated to people who want to bring their skills to the climate workforce. We're on a mission to transform the talent ecosystem and build a workforce humanity needs to solve climate equitably and justly. Our goal is to create a space where you can bring your talent, build relationship, and gain the support of others on the same path, all to empower you to build and work on climate solutions. Since you're attending this particular session, you might be interested in joining a Learn Workplace Climate Action channel in the Work on Climate Slack community. Hashtag Learn Workplace Climate Action is a sub-community for everyone interested in taking action in their current roles and in their workplace. If you have any question about joining our Slack channel or Learn Workplace Climate Action, please leave it a note in the Zoom chat box and one of the moderators will help you. And finally, it's a great pleasure for me to introduce Neil. Please take it away, Neil.
Great. Well, it's good to see everybody here. Hopefully you can hear me loud and clear. We're dialing in here from our headquarters here in New York, and the station, a space station for me to actually teach you these things. So I'm actually excited, partly a bit depressed a bit today because I was like looking through some of the US regulations to really pass it on to you all. But I think hopefully there is like a silver lining to this. So before we even get started, why don't you join our Slido? We like this to be super interactive. So use your QR code, or if you're on your laptop, just go to slido.com. Mobile phone's easy as well. And just tell me, how would you best describe yourself today? If none of these options fit, like let us know in the chat. Like just, if you're like, how would you best describe yourself today, whether you're trying to upskill yourself, trying to get into the climate sector. There's a lot of different options, and I think it's always great to have folk here. So let us know. Yeah, look at this. Everybody loves a good interaction, wherever you're calling in from, late morning, early days. Cool, cool, cool. Don't you love a good poll? Upskilling to get into the climate sector. Yeah. Well, you're not alone, and there are jobs and work is happening in this space. And we need the workforce to be able to be here for that. So great. Well, we can start to move on. It looks like there's a good mix of people trying to get here. And I think this is actually really crucial because when it comes to green skills, you've probably seen the LinkedIn Green Skills Report. Yes, I know it was done before the US elections happened, but we're still seeing movement. I literally was just at Green Biz last week at Phoenix with all the CSOs of the big companies. And there is this sentiment that, yes, it's a tough time. Everyone's feeling the emotional burden that why can't we see climate as important? But it's actually flipped a notch in the private sector where we're like, okay, well, we're going to stand up and we're going to do this work. The cool thing is that we are seeing more embedded sustainability, and that gaining one green skill can improve your hireability by 80% globally and 80% in the US and 50% globally. And it might not just show up in the right way. So I hope that today kind of gives you further skills that you can actually apply, and the latest, which I'm sure everyone is waiting to hear about. So this is the GHG Accounting and Reporting 101. Why are these tied together? Well, the biggest news, if you haven't heard, is that disclosures and reporting regulations, yes, they've had some false starts, but they're starting to switch on literally in 2025. And so we're seeing rises of like ESG controller roles. I know that I just actually saw 2 role descriptions from Nike and Google are hiring for these type of roles that require you to actually have a bit more technical chops in understanding this. But the good thing is that it actually has overlaps with accounting and other types of business roles that people already have, as long as we can translate these skills. So this actually comes from our 8-week 1.5 program. I see some familiar faces of people who might have taken this. So it's cool to see people here. Hey, Sarah. And today we're really talking through some of the reporting stuff. So I actually wanted to start there first and foremost, because people might have seen a lot in the news, and I want to actually help to confirm this. And it actually builds why GHG accounting is even more important than today. And we've done a lot of improvements to, we basically run labs for GHG accounting, and we've kind of gone even further in depth. But with the time that I have available, like, hold me true to this. You can ask questions and we can definitely do follow-ups because I'm trying to jam pack a lot in. So if you haven't seen before, there are top 10 skills that any sustainability professional is at the highest demand. This was a study from IBM, from LinkedIn. So if you look at that top line item, these are the things that you should keep in mind when you're looking at building skills within any sustainability or climate related role. You might notice that some of these are actually pretty broad and linked with businesses. And that's actually a good thing because a lot of the times that is the case, but some get relatively technical. And you can sort of see how some of these today kind of cover that broad remit. The one thing I will say is that we're running about 3 or 4 of these events this year. And so if you actually get a lot of value from this, you can hop onto our website and sign up for our monthly newsletter. We actually give resources like these takeaway slides, which we'll give to you, and we'll give you a link to download them so that you won't miss out on these. But we're really passionate about upskilling and giving access to people for skilling. So please do hop onto our website, opf.degree/newsletter, if you want to make sure that you stay up to date. Cool. Well, couple of trends. Well, we've seen that in the top 25 jobs that are rising right now. I don't know if people have seen this LinkedIn report, but sustainability specialist is in the top 10. So it's still number 9. And I actually ironically like this idea of the specialist because yes, there are certain things that are going to limit people, especially with mid-career roles to director roles, because there is a difference there. But that specialist expertise is still really needed. And we've seen a lot of job descriptions require a few of these technical skills. What else is in the top 10? Well, surprise, surprise. AI skills. What's surprising? I think there was like travel agent or something really random. But the cool thing is just to know that there is still a rise. And the top 3 stats that we kind of hear is that the global demand for green talent is outpacing the supply. And basically, if you don't double the workforce that have sustainability skills, and mind you, I will say, not just sustainability titled roles, but and adjacent skills. So if you are a marketer, but you get a green skill and you're working like sustainability within a marketing role, that's also included. We've also seen top 60% of jobs actually start to have green skills included within their job description. So you no longer have to like quit your job to be able to transition laterally with functional skills that you have. And then the hiring rates are increasing too. So this is all coming from our recent mention, which we actually got into the LinkedIn Green Skills Report for 2024, if you haven't seen, because we actually had Laurel, who was a B2B SaaS salesperson. She did our course and then now is doing climate tech sales. So there's like a lot of creative ways that people are using upskilling to apply their roles in climate. And I think we just need to evolve towards that. So this is all coming from tried and tested stuff. So as we get into the crux of it, I'm going to jump deep and it's going to get pretty technical. So I just want to make sure I get a good sense of everyone's expertise here. So why don't you hop on in this Slido? Let me know how familiar you are with GHG accounting and reporting, just so that I know like how to express this to you. And if someone's an expert, please like contact me on LinkedIn and we should chat, because I like to nerd out and I get a bit deep. All right. So we got about 50% of people who maybe are somewhat familiar. We have 2% who are experts. Okay, so we'll create a bit of a spread. I think some people have some knowledge, but I'll just keep it in the top end. All right, so are you guys ready? So this is going to be pretty dense in terms of the information, but super important for you to keep on top of what's going on. So mind you, again, we will send a link for the takeaway slides so that you can get all this stuff at the end. And I will highly encourage to add your questions, also connect with us. This is all stuff that we talked about. So the biggest drivers of corporate sustainability reporting, and I'm starting here first and foremost, you might have heard about these before. It's the EU CSRD, the IFRS S1 and S2, and then the Californian SB 253 and SB 261. So we will give you these slides. You have to take vigorous notes. But what you need to know about these are still the primary drivers in 2025 for the must do, not nice to do of climate. But it also includes what companies and even country levels are doing. So a couple of things you need to know. ESCSRD has been the talk of the town, and I'll let you know what the latest are, even in the recent letters in February of what we're waiting for. But it's been built by EFRAG, and it really applies to EU and non-EU companies. So remind you, even if you're in the US, there are certain companies that are large enough that they actually need to report for EU CSRD. So these are like, we actually talked to the head of sustainability from Meta, and they're preparing their CSRD report, even Levi's and a couple of other companies themselves. So mind you, this is the required reporting, and I'll show you what actually comes into it. The IFRS is built by the ISSB. So this sounds crazy, but if anyone watches Lord of the Rings, it's the one ring to rule them all. We know that we've heard about GRI, SASB, TCFD. You probably heard about these acronyms. If you haven't, basically there's been like hundreds of these like sustainability reporting frameworks that have been put out there. And IFRS has recently helped to create interoperability amongst these reports. And so that's key. Like if you have like 100 different reports, how are you supposed to actually connect them when there's been years and years of different reporting? The cool thing with IFRS, I'm going to show you soon, but over 30 countries have signed up for it in a very short amount of time. And even though it's voluntary, if it's pushed by countries, non-US countries included, imagine what's possible. And then the final thing is the California regulations. Why am I leaning into this? So anyone that is familiar with the US, you know that the federal government stuff can be all over the place, but the state governments have an ability to make a decision. And California, just like when they had the Clean Air Act, are actually applying a state level regulation that has not been hindered by the current federal government that requires climate disclosures for certain companies. And so for companies that have over $1 billion in revenue or over $500 million in revenue, which are a fair amount in California, they're going to be required to disclose their GHG emissions. So let's go in. So what is actually within these? Well, it's effective as of 2023 for the CSRD for it to be reporting, and it's starting to get pulled into reporting from FY26 to 28. Yes, there might be delays, and I'll kind of explain that to you. But the key thing that you need to know across all of these, what is the core common thing? All of these require GHG emissions for scope 1, 2, and 3. And I'll explain to you what those are for those that don't know, but it's basically the enterprise or organizational emissions. So imagine like, how you have a financial accounting statement, it's literally the same, but for environmental impacts. And that's why GHG accounting is getting tied into reporting today, because of how important it is. Like imagine if, it's basically like if you didn't have to do any accounting for your finances, but all of a sudden now it's going to get audited by the SEC. Like that's starting to what's going to happen with the reporting. And that's why it's so tied together. And that's where there's this interaction between even different areas of ESG and then probably a broad range. And GHG protocol is what underlines this. So these are just important for you to know and take note of. We use so many acronyms that I wish I could bypass them for you. But the key things you need to know is that Europe is doing stuff. The globe is doing stuff through IFRS, through like country level voluntary reporting, which will roll to companies. And then like California as a state that has its own kind of autonomy beyond the federal government. And what does this actually mean? Well, it means that there could be over 66,000 companies that would need to actually comply with this. And that's a huge amount. And if you think about it, anyone that understands scope 1 and 2 and 3, it's not just that core companies impacts, but it's the value chain. So it ripple effects out to many other SMEs and smaller companies looking to do business. So I'll give you a classic example. Anyone know Bristol Myers Squibb? They're a gigantic pharmaceutical company. They're huge. We actually were in touch with them because they did scope 1, 2, 3. They have actually created a required scorecard for their scope 3 hitting their value chain. And we actually met an SME, like a small medium enterprise that had to actually report up to Bristol Myers Squibb. Otherwise, they would lose a $10 million contract. So this is even impacting a cascade of different companies to need to act. And so just don't see it as 66,000, but it could ripple out to hundreds of thousands of companies. And so therefore, these things are important for us to know. But what are the latest? So I think if anyone is the experts in the room, these are the biggest things you need to know. This is fresh off the press. So if for the EU regulations, which is one of the biggest, like it's the biggest crux right now to force the must do versus nice to do, there were 3 different recent notes that you need to know of. So there is this thing called the EU Omnibus regulation. So we love our acronyms, but basically what the EU was trying to do was to consolidate their top 3 types of reporting requirements into one, because companies were complaining. And if anyone's done any type of sustainability reporting, you get lost in the sea of what we call the alphabet soup of reporting. The same thing was happening in the EU with different things coming up. So the omnibus was trying to make things easier because companies were complaining, you know, with CSRD, with this thing called CSDDD, with the EU taxonomy, it's becoming really difficult and actually costly to meet these regulations. And so the EU had this omnibus regulation to try to simplify these rules to make it easier for companies. But then what happened was that in January, Germany and France and a couple of other countries started to say, well, whilst we're reviewing this, this is kind of ridiculous. Like, obviously, people are not going to want to do things that they must do if they feel, I think the argument is that this is more costly than beneficial. And so some of the countries started to argue that, hey, you're actually, you know, putting a lot of burden on us, which ironically, climate should be a burden that humankind actually take on. And that led to this EU response that we're literally waiting for. So in 6 days' time, we are going to get the EU's proposal response on what they are going to do with Omnibus and what the EU plans to do for CSRD. And this is like so important because like some people are saying that February 26th is going to see either a watering down of double materiality. For folk who don't know, that means it's like a company has an impact on the world impacts a company. Double materiality is then forcing an auditable line to a company's impacts to their financial disclosures. So you can see why companies don't want to do that. They don't want to roll their reporting to financial disclosures if they don't have to. But also to do that creates a lot of ripple effects. So yes, it makes sense for the EU to reduce the reporting burden, but the omnibus should still exist. So I will say that, yes, companies are still moving forward, because the one good thing about all this stuff, and you'll learn it more and more, is, you know, I wish I could do a whole 2 hours on reporting and disclosures, because we've literally updated our whole curriculum around this. But if you think about it, if we tie sustainability to the finance side, right, then we're actually doing what sustainability is. It's a business value driver. It actually reduces costs, right? Using less energy, water, and waste. And we're actually applying it to what the value creation exercise is for the company. So anyone that does CSRD requires to actually bring in the CFO to say, okay, how much money will it take for us to decarbonize, and what's the ROI? So you can sort of see how these type of things, even though they're difficult, are actually the right way we need to go. For my US counterparts, this is a letter from the acting chairman of the SEC, for better or for worse. This was a letter that was released 9 days ago, where, surprise, surprise, if people haven't been following, there's a lot of pushback at the SEC level, the IRA bill, all the things kind of driving at the federal level are kind of under risk. The key thing to note here is that the new commissioner is probably clearly opposed to the rules right now, but not unilaterally revoking it, right? And so there is just this movement where the SEC was, if people weren't following, and this also impacts the globe. So even if you're in the global south, this is relevant because all these things ripple. We're against it. But the thing that I will sort of say from here is the but California state regulation. So SEC, even if it gets put away, if anyone knows like how governments work, and maybe you know in your local countries, the states have their own ability to make their own decisions. Otherwise, it'd be ridiculous, right? So California has not budged on its regulations, meaning that, you know, other states can adopt like California, just like the Clean Air Act was then rippled across to other states. We really need to be supportive of California. And that is still making like a good amount of companies to report. And as we move forward, hopefully this becomes like common sense. So a couple of the key takeaways, talking to CSOs, it's going to be a tough year or two, right? This work is going to take time. It's going to be costly, but it will make a world of difference because it is forcing a couple of things. It's forcing us to say, what is the business case for sustainability? Not just what is nice to do, right? That's number one. And it's actually interweaving it so that it's not just a sustainability department anymore. It's the HR, it's the legal, it's the finance. So this stuff is actually forcing businesses to transform. So for those that don't even want anything to do with acronyms and reporting and disclosures, I highly encourage you to lean in because this could have an outsized impact. And the cool thing is, if you go one step further from IFRS, look at the 30 jurisdictions. This is literally from last week. We have more than 30 countries, even countries like all around the globe, who are now adopting IFRS standards, which have an interlay with all the stuff with scope 1, 2, 3. So if you look up ISSB IFRS standards, which are the voluntary standards, if countries are taking this on, the work is still getting done. And I'll give you like a promise optimistic route. We're actually working with a big contract with Australia's government right now in Southeast Asia. And they're leaning into climate, like they're doubling down on it. So like climate is not just gone because of what we read from the US. There's a lot of interactions that we need to know. So I really hope that that kind of made you a bit smarter about the latest and gives you an indication of why GHG accounting is important. So let's just dive in and I'll continue to make sure we get good things. So and people didn't realize greenhouse gas emissions come from multiple sources. They're not just carbon equivalents. That's a misinterpretation of what it is. There's methane from cow burps all the way to the thawing of the permafrost when the snow kind of goes and then it warms up. The whole concept is that we're trying to minimize this thicker blanket that's going to warm us. But this is the big opportunity and gap that we see, right? Businesses can actually benefit from GHG accounting. It's not just a reporting exercise. And this leans into why we need to build the business case for this. There's more than 40% of companies actually expect $100 million in annual benefits from their reduction targets. These are both avoided costs. So if I give you a tip, if you are doing any of this work today, I would highly encourage you actually put a dollar figure on this. Because unfortunately, when you report on avoided costs because of sustainability, the company's just like, oh, we made more profit. It was like, actually, you did that because we bought renewable energies, because we reduced waste. So a lot of the times we need to actually go a step further. But ironically, even in 2022 to 2023, only 10% of companies actually measured it. So there's a gap and an opportunity that I think is driven partly by regulatory pressures. But if we get this stuff right, that's where this benefit can have. And I think everyone, no matter if you're a GHG accountant or in the sustainability team, should know the core elements of GHG accounting. So why would you do this? Well, yes, number one is that there's a lot of stuff that goes on with a company, right? They have a lot of impacts. One, you want to be able to identify where are the actual hotspots, where's the impact happening? So then you can focus your efforts on what the high impact reductions are. And I'll show you some examples of reduction like solutions. And it also helps a company to set proper targets, invest into the right areas, share their progress, and particularly report to regulators, which is kind of the key tenet of it. And it fits within what we call a science-based target, right? It's the core tenet of you can't reduce what you can't measure, right? And so there is this 5-step process for setting a science-based target, all of which I'm going very, very quickly through because I like to give you lots of information quickly, but connect with us, like join us in our next cohort. We will go through this in a bit more of a slow pace. But the thing with GHG accounting that you got to know is that as much as it's good, it doesn't address inherent flaws of business models. So I'll give you an example, like IKEA, right? Everyone knows IKEA pretty much, right? Fast furniture. So GHG accounting can measure the impact, say, of deforestation, because we're cutting down trees perhaps to make the furniture for IKEA. GHG accounting doesn't necessarily alone stop the fast furniture model. Same with H&M, fast clothing, apparel, right? What it does is it kind of like gives you opportunities to know where the impacts are so you can reduce. So GHG accounting needs to be interlaid with other non-GHG accounting, like biodiversity to like other stuff. So just note that. But what it does do is it gives us transparency in markets. And I think that's key. Like if you imagine it, if we didn't have accounting, right? I know people probably having like visceral feelings of accounting. I hated accounting, but if you're looking at annual reports, like if we couldn't compare other companies to one another, then we don't really have transparency in market. People could do creative stuff. So the same thing is what it allows us to do within companies is hold them accountable. And additionally, it allows us to properly reduce emissions and get the value creation from them. So what GHG accounting and where the standards matter are here. So GHG accounting protocol is the main tenet of what teaches us the scope 1, 2, 3 method. The latest news for people who are already familiar with this is twofold. We will have 2 standards updates. SBTI has actually got an updated standard if you want to look at that for scope 3, but the GHG protocol unfortunately has been delayed to give us updates for scope 3 until 2027, but we're also waiting for the FLAG guidance, which is the forest, land and agricultural guidance from the GHG protocol, which actually should come out this quarter, but it's delayed, so fingers crossed. But regardless of the fact, you'll be able to get a lot of what I'm talking about here. They're just really dense. The good thing is that almost 100% of Fortune 500 companies actually use these things. So this is the core thing. Go back to the source. GHG protocol is the thing. And it relates, right? And this is why I want to join it to all the standards. The reason why I'm talking about GHG accounting today, and sorry for going so deep into these technical terms, but I really want people to understand them, is that they touch on all the regulations and drivers that I literally talked about. So if there's one thing you can get from a core skill, is at least understanding the basic tenets, which I hope you'll be able to do today, right? Drinking from the fire hose when you're with me, sorry. And this is our process, right? When it comes to GHG accounting, there's literally 5 steps to it, right? And you can take this as a takeaway. You can look and reference it in the future. But if you just look at the top bar, that's the key, right? You need to identify what are your sources of emissions. You need to identify where the issues are. You want to collect some data. You want to apply some emission factors, which is evaluating what the environmental impacts are. You then want to calculate those emissions, and then you report and take action. So at the core tenets of it, the actual math is basic arithmetic. It's like multiplication and division. Other than data collection and cleansing, the actual process should be easier than it is. There are just nuances in the sense of what you need to keep considering whilst you go through. And these are some of the 5 principles you need to keep in count, right? So when you're doing anything with GHG accounting, you need to make sure that there's relevance, right? So if you're pulling like an emission factor, say from Japan, but you're actually working with a company in the US, right? Electricity grids are different, right? So you need to make sure that what you're picking is relevant. You also need to make sure it's as complete as possible. Did you know that BP has a net zero goal, but excludes the burning of fossil fuels? They literally don't have the burning of fossil fuels. Like that blows my mind. And that's where, you're noticing that if the standards aren't caught up, you have creative accounting, just like we had Enron and financial accounting. So completeness is key. Consistency is important because as you go through years, like you need to be able to track and change your performance, the transparency, so there's an audit trail, and then the accuracy, which is key. And I'll show you where accuracy can fall through. So how do you actually build it? Well, it's called a GHG inventory, which is a sheet. And I'll show you what it looks like through a Microsoft example. But the 3 things you need to know is 1, GHG accounting statements are annual statements. They're either done by the calendar year or the fiscal year, just like any financial accounting report. Then you need to choose what are the boundaries that are included. Some companies have complexities, right? You might own an equity share in a company. You might not have financial operational control. If you're a small business, it's way easier. And then you have your operational boundaries, which are your scope 1, 2, and 3, which are kind of like the line items that break down the different categories of emissions, which I'll show what you are. So that's a core tenet. If you combine all those things, you're basically doing GHG accounting. GHG protocol, unfortunately, right now only requires scope 1 and 2, but you can see why scope 3 is important and why these regulations are actually going to do a lot better than they are going to do worse. So what goes into these? Well, I'm going to break these down one by one. Scope 1 emissions are your direct emissions. So if you're a company, it is what you own and operate, whether it's stationary combustion, your mobile combustion, so things that are fixed versus moving. It also includes fugitive emissions if people emit refrigeration leaks, and a lot of that's more about the maintenance side. And it's your process emissions if you have them. So these are things that if you have them, then you would do. So for us, like as OnePointFive, like we don't necessarily own any vehicles, but if we did, we would include those into our emissions. All right, so that's number one. Number two is basically your indirect emissions from the purchase of electricity, heat, and steam, right? So these are your utility bills, your heat. So scope 2 emissions are done in two ways. So either one, you use a location method, which is calculating your average emissions intensity of your local grid, or ideally, you're going to market-based, which is calculating your supplier-specific emission factors. So what's the difference? Well, if you look at Microsoft to Meta and all those, you might say, well, isn't AI going to like destroy scope 2 emissions? You're absolutely right. It probably will in the short term. They're struggling with that. If you notice, a lot of the times companies will use both. It depends on what data is available. Ideally, you're using market-based because it's more accurate. But sometimes, utility bills don't come in that way to spread them by individual sources, right? So you might notice even with Microsoft and Meta and other tech companies, they combine both, but they've also been under scrutiny because you can imagine depending on the method that you use, anyone with basic math can say, wouldn't your results be different? And there has been some criticisms of using like something that underbakes the emissions of your scope 2, but it also is based on the data that you can get. Cool. And then you have scope 3. So I'm going to split this up into two parts, which is upstream versus downstream, right? There are 15 categories that you need to know of. Not all categories are relevant. That's actually key. Some industries might be more impactful than others. We call that what is material versus immaterial, making sure that you have cutoff criteria if it's not material for that company, right? So you have purchase goods and services all the way to business travel. I think business travel and employee commuting are one of the biggest ones because teams love that. If you can reduce cost on that, you're also reducing emissions. But, sometimes if your consumer product's good, like your purchases of goods and services is key. And even the transportation options that you use, right? So you can look at all of these in your own time. And then if you go downstream, which is further down on the distribution and consumer side, some of the interesting ones that I find is the end of life treatment of products. Like, are they thrown away? Are they incinerated? To even the investments that a company holds, right? So if you're a great company doing great thing, like imagine Patagonia using all its money to then invest in oil and gas, right? That's not great. So it's like you can account for the capital movements as well as the use of your product sold. And so what is important about scope 3 is that, as you can look, this is from the CDP. Depending on your industry, you'd be like, okay, well, different scope 3 categories have different impacts. You're absolutely right. But like the chemicals industry, you can see how many there are. Even the oil and gas industry, it actually says you should include use of products sold. So BP wasn't following this. Why could they do this? Was because it's not mandatory. What's going to make it mandatory? Reporting and regulations. How can we make that happen? By us leaning into the government side of things. So can you sort of see how that ripples up and why GHG accounting alone without these reporting and disclosures kind of just create creative accounting? So we really need to stand up for what is right and be able to then show the value creation from this work. Right. So what data should you really collect? Well, there are three sources of where data comes from, right? Either you get your direct measurement, which is literally like using sensors on the ground, direct monitoring. If you don't have that, then you use activity-based data, which is like the physical units or, the gallons of fuel that you're burning within a vehicle. And if you really can't get that, you use spend data. Why is spend data last? Well, it's the easiest to get because everyone tracks their finances, but it gives you a lack of accuracy. So let me give you one example. Imagine if you told me you spent about $500 on fuel for your cars, right? At what price? Prices for fuel change all the time, right? So there's a real lack of accuracy at that point versus if I looked at my odometer and my car and said, okay, at the beginning of the year, it was this versus at the end of the year, it was this. And this is the type of car it is, you get more accuracy. But can you sort of see that there is difficulty? The more accurate you want to get, the more difficult it is. So a lot of the times our GHG accounting is a combination of all three, but you want to move towards better accuracy and precision. So let me give you a couple of examples. One, direct measurement. This could be like a sensor, we have them in our houses, the direct meters for our water, our electricity, right? That's getting the data directly from the source. If not, then we can get data from, say, kilowatt per hour. This is your utility bill. What electricity do we have to pay for? What was the actual price? What's the kilowatt hours? So then we could use it, that kind of thing. And finally, if we can't do that for the same example, because everyone understands at least cars, I hope, you could use the receipt, right? And so this is, oh, well, this one's a food example, but maybe you pay like different amounts of money for, different amounts of stuff, and then you multiply that emission factor based on the food that you have. So this is where the different sources come from. The main thing that you need to know, and data collection is one of the annoying thing, probably Richard has had to deal with it as well at jail, but it's like you need to make sure that you have like structured ways to collect it, right? What's your inventory process and systems? What's your methodology? Like you got to balance accuracy and precision and documentation. It's the hardest time you do it the first time. Like who collects like odometer readings, right? So we've done a couple of GHG accounting where the first time we did it, it was pretty rough, but then we set up protocols in the future that made it easier so that, the procurement team, whoever is like loading up the right documents for us, so then we can do it. And there are a lot of software tools, which I'll share with you, that make this a lot easier. So say you collected all your data, you cleanse all your data. How do you then do the calculation? Well, to the math. So this is where I'm going to show you 3 diagrams really quickly about how simple the math is, but you have to have the right data. But before I do that, you need the other side of the equation. Okay, I've got great data on kilowatt hours or whatever, but how do I find out the environmental impact? Well, you find that from what we call an emission factor. So emission factors are basically like units of measure for particular activities that allow us to indicate the pollution that generates, whether it's carbon emissions, but it can also go further than that into like other areas if you do LCA modeling. So for this particular example, you can take, say, gallons of fuel. By the way, for my metrics people, 1 gallon is 3.78 liters. And units are important, so don't forget that. But it's basically where you have a way to be able to use your activity to say, okay, how much CO2 equivalent is getting created. And so in this case, for every kind of gallon of diesel that is burnt, there's 10 kilograms of CO2 equivalent getting released. So there are huge databases that provide you all these emission factors. You want to choose ones that are relevant for your geography, and whatnot, to be able to create and transform these into impacts, right? Get it? So there are like 100 of these. There are government databases. I can share a ton, but if you also have a software tool, they're also available there. So once you have this emission factor, you might also need to adopt what we call the Global Warming Convention. So there are different greenhouse gases. So this might go over your head, but CO2 equivalent, when you see CO2 EQ, that is the rolling up of all other greenhouse gases. So anyone that knows climate sciences knows that it's not just carbon dioxide, it's methane, it's hydrofluorocarbons, it's the nitrous. So the reason why we roll it up into CO2 equivalent is for twofold. One is carbon dioxide is the most prominent greenhouse gas that we have. It's like 65% of emissions. It's what we excel. But 2, it also makes it easier for us just to have one number to report to. So what this is showing is, say that you're a food and agricultural company, right? And you have a ton of cows, right? Cows are going to create methane, right? But when you show it up in your GHG accounting, it will show up as a CO2 equivalent, right? And the way that you do that is that if you did not know, and sorry for those that are like really new to this, but these are stuff that you at least kind of learn, is that methane is much more potent, meaning that it has 28 times the warming potential that CO2 has, which is crazy. People didn't know that. That's why we need to address methane across a 100-year period. So in order for us to like figure out what the carbon equivalent is for methane, we actually have to multiply it by the warming potential. So say the warming potential of CO2 is 1, the warming potential of methane is 28 times. And so that's how you get kind of a CO2 equivalent. So I just wanted to make sure that you knew that when you see CO2 equivalent, you should be able to break it back down into its bespoke, like different greenhouse gases, right? So once you have that, so you have your emission factor coming back, then you multiply it with, say, we knew that we used 100 gallons of diesel, which is the data from the company, that then gives you the emission of like 1,000 kilograms of CO2 equivalent, right? So the math is pretty simple. It's the data collection, the cleansing, the different processes you need to go under, and then making sure you have the right emission factor. Units are important, so I'm just going to show this up there. Always have a centralized unit conversion, whether it's inches to centimeters. I just wish the world was in metrics, but US can be US. But you don't have to tell you how many times there's errors here as well. And so what does this result in? Well, this is the magic of it all. So then you kind of have this kind of thing that looks like a financial accounting statement. And you're right, it kind of is, right? You have scope one, which is your direct emissions, scope two, which is your electricity, steam, and heating. And then these scope three categories, which you might even notice from Microsoft here, they don't include all of them because it makes sense. Some of these aren't material for them, but they at least break it down. And then you have your reporting year, which is either a fiscal or calendar year. And then you have your associated emissions in what metric tons of CO2 E equivalent. So that's what I was sort of talking about. When you see E, you should still be able to, as the reporting company, break it down into the different greenhouse gases, because you wouldn't make a CO2 like decision on methane from cows, right? That doesn't make any sense. So we really need to be able to do that. And so this is what we're getting to. And why is that important? Well, I mean, a few things is that, for different sectors, like scope 3 emissions are actually the biggest emissions. So they're more than 80% of emissions. So we can't forget that. But we need to remember that there's relative emissions by industry and sector, and then absolute emissions depending on your sector or industry, right? So energy is going to have an outsized amount versus real estate. And you might be saying, okay, this is a lot, like there are things that are going to help you, right? There are tools and service providers, even the greenhouse gas, even EPA has its own tools. Yeah, we do this work. And the one thing I will say is that just like QuickBooks didn't get rid of financial accountants, these GHG accounting tools won't get rid of GHG accountants. There is too much complexity here. It will just make it easier to do over time. But if you can imagine, it's still a data issue. So a lot of the times we work with different tools, but we kind of provide like accounting services to workers. And if you work in-house or you work for any consultancy or company or startup who actually wants to measure their footprint, these skills are important regardless. And so there's a huge amount. And in fact, we run a GHG accounting modeling lab during our academy. A few people have done this, where we actually have an education license to Change Climate Project, the nonprofit's climate tool, to actually build a scope 1, 2, 3. Because you probably know that unless you've actually done one, you can't actually say in your interview, here's actually one I've done. It always kind of floors people when they don't have that, but then you can actually screen share a real model that you did. So why does this all matter? Like, we went through a lot of technical stuff. Well, at the end of the day, if you do it right, a GHG report should at minimum include these things that I talked about, hopefully more than just scope 1 and 2, and then the methodology. So if we look at Microsoft, what were their results? Well, the surprising thing is, if you look at scope 1, 2, and 3, 3 is massive, almost 98% of emissions. And that's not surprising from many companies. And if you think about it being optional in the GHG protocol, this is why reporting and disclosures is important, because why not impact what you can change? 2 notes here. One, it allows them to then lean in. Did you know that majority of Microsoft's, and even I think Google, I went through Google's one as well, they're like literally the consumer product side, like the actual physical products, whether they're the computer laptops, that's actually generating the most emissions right now. But people will be saying, well, wouldn't this green bar just increase with AI? It will. And these companies are freaking out. So there are a lot of like changes in companies that will increase emissions intensity. So we're thinking about absolute emissions versus intensity, say by per employee emissions. So there is this like kind of like catch 22, but in the promising side, it allows them to like lean into where they should make decisions. So in my opinion, categories 1 to 9, and then scope 2 should be our focus. Why? Because they're generating the most emissions. So if we actually then used our limited budget for the year and focused on Microsoft's purchase goods and services and things, that's where we're going to have outsized difference. And so that's what rolls into the sustainability strategy and then the business strategy. And that's where the procurement team comes in and say, how can we like purchase materials that are like more effective? How do we, with the use of products sold, like educate our consumers on like how they're using our products to reduce the impacts? So what does this allow us to do? Well, in terms of action, here are a couple of things. You want to ask me like, what do we recommend? Well, this is just a mock example of a CPG company. So for example, some things that they could take is to switch to renewable energy sources, right? Where would that show up? It'd probably show up in scope 2, could also show up in scope 3, depending if you own it. Oh, well, scope 1 if you own it. Switching to low emission vehicles like electric or hybrid vehicles, or even just reducing transportation. So, their policies for traveling. AC for scope 1, generally it's about regular maintenance and being able to upgrade older materials. And then even all the way to scope 2 could be like on-site renewables. But if you can't have that, there's also ability to purchase RECs, which are renewable energy credits. But there's also arguments between like how far you can do that without it being business as usual. Other scope 2 things is just like things like switching off your lights and stuff like that. So you can like still measure them. We're in the WeWork, so we can like still get that information. Scope 3 becomes a bit more nuanced. Again, this is a CPG example, but for purchase goods and services, the biggest thing is a supplier procurement scorecard. So it's basically like just having some criteria when you're buying materials to just check, is it virgin, is it recycled materials? Because we know that virgin plastic is fossil fuel generated. So these will pop up in the emission factors, and you can improve that. You can change your energy sources, you can source your materials locally. So we're seeing a lot of localization of supply chains, because if you're having purchasing or flying stuff from international, it creates a lot of impact. And then you have all the way up to like increasing emissions, energy efficiencies, and all this stuff is avoided costs. And so we need to be able to better to do that. So that's upstream. And then downstream is you could redesign your products, right? You could change your user instructions for customers to promote efficient product use. You could provide options for like the end of life, or even just educate people how to recycle the products that you sell. And then you can even switch around where you invest your dollars and where you can sort of change things. So there's a lot of logic behind this. And hopefully you see that sustainability and climate is no longer a nice to do. It's literally business strategy in the 21st century. And I just wish that people could evangelize this. And so even if you're still like confused about this, don't be. Like there's so many resources, so many people like ourselves really trying to tell you how to get past these acronyms so that you can really see the value of this work that lines up purpose with profit. And so we did this for one mid-sized consumer brand that you may know of, but we can't mention here. And when we did their scope 1, 2, 3, we actually were able to find their biggest hotspots in their value chain. And then that lead to the strategic changes that they need to make. What were they? Well, one, they were actually using air freight for a lot of their products, which has a huge emission factor. We're able to improve some of their warehousing so that they reduce their it to ship freighting. We also found that particularly for this product, it was a washable product, that we actually found the delta of how many times you wash the product before it becomes like you might as well just buy a fresh one. And so we actually included instructions for the customer. We actually even did random things, like we went to their warehouse and we realized they were using plastic wrap for their products, and they didn't need it. So they were able to get rid of that. There was like certain things that just didn't make sense. And if you have a better product to packaging ratio, that's also reducing emissions, right? We did another project where we dehydrated toothpaste and then it allows for biodegradable material, and then like more cost effectiveness for like palleting and things like that. And the final thing was the supply energy use. When we went to their manufacturing sites, we realized that they weren't making use of renewable energy on site. And even with their local utility providers, they could change them. And so we also noticed a lot of waste streams that just weren't getting captured. So there's a lot that you can do. And this all saves company cost. And with the right reputation, fingers crossed, with the right communication, you can generate a lot of value. So that was a lot. And why am I sort of saying this? Well, this is like part of, and there's a lot of our graduate community here, which is fantastic. We run this. This is part of our program. Like we believe that the real world, if you think about real world stuff, if you're looking for a career, think about it this way. If a Coursera would not have taken over the world, otherwise everyone would be doing online education, right? But it does help you. But what you need to do is you need to do this work, practical lab. You need to actually do a GHG accounting model. So if you can actually get that, there are volunteering opportunities with Change Climate Project. In fact, we're just about to launch that opportunity with our community because we've reserved 40 seats for people who want to get GHG accounting expertise. But you need to sort of hear from these industry experts. If you could hear from the head of Meta, like what they were saying, like we interview them and we're like, okay, what happened? And that's why I can tell you that they're struggling with scope 2. And they spent the last 6 months figuring out CSRD, because I literally interviewed this person a couple months ago for our community, like what is actually happening. So you get an insight there, and then the community be able to drive it. And this is all good because if you do this right, you can double up your skill sets and confidence to advise. And I think that's absolutely key. I think what blows me away is a lot of the folk here are actually doing the work internally. You don't have to quit your job. We've had people do it. And you can notify it through LinkedIn, through the partnership, to say, hey, like I've actually done this. And the cool thing is, if you want to know career journeys recently, these are some of the avenues that people have been taking. So this would be good for people looking for jobs, just to realize what's happening in the job market right now. So yes, number one is securing your job, right, in sustainability as a specialist. But Jennifer, the number one too, she was actually a JetBlue flight crew member, and now she's in the sustainability team at JetBlue. So there's these internal lateral shifts by getting green skills that you don't have to quit your job, but can be on the sustainability team. And she wasn't able to do that before because she didn't have those skills. Another one was Matt, who's number 3. He was a cost engineer at Nike, right? And when he got our skill sets, he's now a cost engineer at a renewable energy company. So there are functional pivots right now that are happening. Actually, functional one is key. So if you have a functional skill like marketing, procurement, logistics, data science, I would double down and see if there are like other functional roles, but in climate roles. Then there's upskilling and OSJL here. We had some team members who are already doing sustainability, upskilling and then going further and getting promoted. And then other people opening up their own independent shops or startups. And it's like possible. People will get jobs, people can get there. And I think it's all done by the fact that we have a diverse community. And this is something that we need. I think we need a climate community that is going to drive further, that are industry driven. And we need to move that way. And we're like really cool that we have like 50 countries represented and a lot of diversity, because the worst thing is that the most of the impacts of climate change impact the global south. It's not Europe, it's not the US. Like, what about the people in India, the people in Malaysia, the people in Myanmar, the people in Argentina? And so I think in some senses, we need to like work together with our global counterparts. And so with that, if you stuck with me till now, this is the big opportunity. We're doing a huge, we just signed a partnership with Work on Climate to make this super accessible for people. So on the one hand, we have needs-based scholarships. Like if you want to actually upskill yourself, you can actually use this code in our upcoming cohort. We really want to make this super accessible for people and for more and more of the workforce to actually use this work. So with this, like this is a community perk and we're really excited to continue to offer this. This is actually a unique one because we don't offer this much normally, but it's just because this is a skills-based project. It was our first one. And we wanted to just reward people for just showing up today. Like, even if you're like, holy crap, like Heather's been taking notes like crazy right now. I can tell. Like, even if you're just like, what the heck just happened? Like, trust us, there are guides who can take you through this. There are people like Richard and Sarah, even on this call, who like really advocate people who are working on this stuff today to really help you. And so we run 3 cohorts. We have one in March, we have one in the summer, we have one in October. You can always apply and defer. It's competitive, but we want people who are actually going to use these skills for the greater good, and that they kind of lean into the culture of what we're trying to build from a community standpoint. So you might as well throw in an app. Our apps actually close anyway in 2 days. So that's why we also have this code for you guys to do. Awesome. You guys should connect with us on LinkedIn as well. We'll be sending a link to get all the takeaway slides, and let's get into questions. Cool. Oof, I got through it, Victoria. My goodness. All right, so I'm going to look at some of the questions on the Slido. So if you got the Slido link up, are there any certifications for any of these reporting stands that you recommend, especially ones that are affordable students? Yeah, this is great. So I will say that, yes, you can go down, well, you can probably find certifications for every single one of these reporting standards. Part of the problem is like, okay, number one, recommendation, if you actually just wanted to get reporting training, I would probably dive deep into like, say, ISSB or IFRS first because of the interoperability of all the different standards. But I don't, part of the problem what we found is that there are only parts of the picture. That's part of the problem that I'm finding with this. You can get like, there's GHG accounting. I know that the team is like building their own training, but unless you can tie GHG accounting to the other bespoke parts, that's where the problem is. So I can tell you that there are like, I think even Trish Kenlin, you should follow her on LinkedIn. She just launched this 64 certifications of climate. Like, individual certifications are not helpful unless they get pulled into like a professional role or function. It's like a bit kind of disjointed. So yes, you can find this, but they are in varying qualities. So I would sort of say if you wanted to reporting standards, maybe just read the IFRS, ISSB standards and all the correlating stuff. GHG protocol, they haven't launched their new course, and even then their old course is kind of average, but read the GHG protocol scope 1, 2, 3. In terms of like certifications, like we give almost close to 100% scholarships to good students, by the way. So you can also apply our way if you're an also nonprofit startup, don't have a job right now. We will look out for you. Yeah, but that one's a tricky one. What methodologies, I would like to know what methodologies others are using to account for work from home emissions, especially when your workforce is globally distributed. Oh, that's an interesting question. All right, let me get my accounting hat on because this is a different one to sort of switch my mind to. Yeah, so in a theoretical sense, so if you did have to travel into work, that would be under employee commuting, under scope 3 emissions, on downstream emissions. If you are working from home and you're capturing emissions, it depends on whether it fits within one of those categories. And I think in an ideal way, right, that would lean into the electricity uses of your laptop and all those types of things. But I'm not sure whether that actually becomes in scope for scope 1, 2, or 3. But I can get back to you if not. My accounting expert's literally just around me, and she's probably spinning her head going, I know the answer to that question. So do you need to know LCA to master scope 3 GHG accounting? Okay, so for people who don't know, what is LCA? It's life cycle analysis modeling. It's within module 3 because there are product level emissions. So if anyone knows, what do you call them? Carbon labels. So you know how we have nutrition labels? There is something called carbon labeling. Like if anyone was like smart enough to realize scope 1, 2, 3 doesn't actually tell you your product level emissions, right? They're kind of ancillary. So just like we have profit and loss statements, balance sheets, and cash flow statements in finance that use similar data but give you different views of a company, lifecycle assessment modeling gives you product level emissions, while scope 1, 2, 3 provides you more enterprise level emissions. So the quick answer to this is that you don't need to know LCA to master scope 3 GHG accounting, but you will need to know LCA in order to build decarbonization plans. And so why do I mean that? Well, LCA modeling is kind of like a fancier way of doing what we call marginal abatement cost curves, which is once a company gets to their reporting, they basically need to cost out the different options, right? So like how much is it going to cost for us to buy solar and how much emissions reduction is going to occur from that, right? All the way up to like, I don't know, changing our facilities, right? All these things require a bespoke financial and emissions modeling. So LCA is one part of that, where once you start getting down to specific initiatives, other than financial modeling, which anyone knows financial modeling like NPV values and cost tax breaks, all that stuff, you almost need to also have bespoke emission modeling. So I think LCA becomes more important once you start having to implement scope 3. And some companies are getting there because you're going to have to go further. So life cycle assessment modeling, we teach that. That's actually my specialty area. But if you want to know, that's the ISO standard 14040, 14044. Sorry for the acronyms, but ISO has a 14,000 series that they launched in the 2000s that governs all this work. All right. Whew. Let's keep on going. Wow. Okay. Some of these are pretty specific. Let me see if I can find something a bit more general. Yes. Okay. So anyone that missed it at the beginning, these policy and regulation stuff, so we'll share you these slides. We also have another 100 slides on this, just to let you know, for each of these. So if you just let us know what you think. These are the latest information bits and pieces, but we also run like a full deep dive into it. And even for Sarah and Richard's purpose, I've actually spent 60 hours in front of this desk for the last month and a half. I haven't been able to tell people, but I've re-recorded every single 167 3 to 7 minute videos using this setup for all of the stuff that you guys are asking me so that we can relaunch it and give it to our whole entire community. I've not been able to say that, Richard and Sarah, but it's like literally almost killing me. But we need like really bite-sized pieces to really understand this in a modular way. And I'm trying to make that happen. Like today, you basically heard me squish about 4 hours of stuff into 50 minutes. So if you were like lost, I was just trying to pack a lot in. But yeah, there is a lot more that needs to be done to break this down for beginners. You're for sure right. If you wanted to, you would look online. There's probably explainers about them, but I feel like scientists and engineers are sometimes the worst at doing it. All right, cool. Well, Victoria, we're getting to the end. There's a lot of questions, which is great. So people should connect with me on LinkedIn at a minimum. We will send you the content slides. So definitely like download them, take a read, give us feedback. And I think with that, we'd love to make sure that we get your feedback. So if you can take a moment, Victoria, I'll pass it back to you. I'll love to be on time, but it's been an absolute pleasure. I'm actually looking at you guys because I have too many screens. My name's Neil. OnePointFive, like support our mission, be part of this. Let's get upskilled. Let's drive the future of the workforce. You guys have been great. So thank you.
Thank you, Neil, so much. Such an amazing session. I'm sure all of the people in the attending participant list really enjoyed it. And thank you, all of the volunteers on the Work on Climate team and the OnePointFive, Denise and Lara, for helping with the chat box. Yes, please give us some feedback. We really appreciate it. It really helps us improve in the next sessions that we do. You can just scan the QR code on the screen, or use the link that Chris just posted in the chat. And also don't forget to go to Learn Workplace Climate Action channel to continue the conversation on improving, making your workplace climate focused. And yeah, let's send some hearts in the chat or reacts on the wonderful partners for 1.5. If you want to apply for their next cohort, make sure to use the referral code that Denise has shared to get a discount of your tuition, and the application is successful. The deadline is on Monday. And we'll send a follow-up email with all the details and the recording of this event. So thank you so much for the session. Bye-bye.